I'll give you some news we got yesterday and some news we're about to get this afternoon today. That's what we'll cover on today's podcast. Here's what we have. Yesterday, one of the big questions is what was going on with precious metals yesterday? Why were they all weak across the board? It turns out the CME group had raised margin levels on all precious metals due to, for precious metals futures, especially silver and gold, to manage risk and align with higher market volatility after major price surges in 2025 is what the Beaumont Enterprise reported. Now, that just means that leveraged traders couldn't hold the positions. The cost of holding that position went up, and that may have caused the sell-off. They're all rebounding today, but that was the reason that they moved yesterday. Now, let's get to the news that's coming out 2 o'clock Eastern time, 1 o'clock Chicago time, and that is the FOMC minutes. Now, these were minutes from December 9th and 10th meeting, but as you remember, a lot happened in that meeting. Number one, the Fed did cut interest rates 25 basis points to a range of 3.5 to 3.75. The big discussion, and this is a discussion that will continue, is the risk of inflation versus the risk of the labor market. There were dissents. Remember, Austin Goolsbee and Jeffrey Schmidt dissented for no cut, and Stephen Myron dissented for a 50 basis point cut. What else happened? We got the summary of economic projections, which showed an upgrade to GDP forecast in 2025 and 26. It showed a lower expected inflation or PCE rate in 2025 and 26, and it basically showed an unchanged level of unemployment. So it was considered, it was feared that Jerome Powell would do a hawkish cut, but it was actually a somewhat dovish cut. Why? The big news, they ended quantitative tightening and began buying short-term treasuries. So you can make the case a slight move to quantitative easing. And so this, though Jerome Powell signaled caution in his press conference, and a move lower in interest rates is not really put in any of the probabilities early next year. It still calls for approximately 2 cuts throughout 2026. So that's some of the news you'll get from the Fed minutes. It's 20 days old, but it'll still move the markets.